Hey everybody, good morning. It's Pete. It is Tuesday morning, February 25th, 2020. Welcome to today's edition of Stocks for Breakfast. If you like today's video, if you have any questions, please click down and subscribe. You'll get updates. And if you have any questions, I will post my email just below the video in the comments in addition to whatever stocks we discussed today. Obviously, the market got pounded yesterday on the coronavirus spreading out of China. So I'm going to show you briefly what that means. So what we're going to focus on today is obviously damage control, but the single biggest thing, actually two things we want to keep in context here. Number one is the stock market has been on fire for almost 2 years, and a 2% pullback, while the number is large, the 1,000-point number, which was the third largest point drop in U.S. stock market history, seems wow, like everything's falling apart. Let's put it in context. When people have absolutely no idea what they're doing about the stock market, just forgetting about their money, leaving it in their 401k, and they're getting 25% per year and think that's normal, we I don't want the market to go down, but we do need a little context. And I guess that real honestly, the single biggest thing is a wake up call that the stock market can go down. And again, coronavirus reason aside, a lot of people are being hurt and that kind of stuff physically. So I'm not talking so much about the coronavirus. This is about trading stocks and helping you to really feel conviction in what you're doing. It really comes down to this. Don't get complacent. Don't get complacent. I'm not saying get out. I'm not saying put in trailing stops. What I am saying is when you open your envelope, don't, I guess envelope, that's how much I'm dating myself. Well, as a brokerage statement they open, everybody just logs in. When you take a look at your account, just be aware that at some point you're going to have to make decisions. And now, and as the market's moving, you should have plans in place as opposed to reacting after the fact. This could be a healthy pullback. It's a tremendous buying opportunity. I'm going to discuss what that means in a second. But I just want to throw it out there. Don't get complacent, because I traded through the financial sell-off. I owned a trading firm in New York City during the financial sell-off in 2007, 2008, and the ultimate bounce in 2009. I can't even tell you the amount of people that were trading in my office that saw their 401k cut by 2/3, and they were frozen. And I'm not saying that's what's going to happen right now. However, it has happened in our recent memory. Now, that was a completely different scenario. All I'm saying is, if you want to take stock speculation seriously, if you want to have that extra money in your account, if you want to have control of your financial future, you have to pay attention to it. You just can't leave it up to somebody else. You can't ignore it. You can't say it always comes back. Historically, it comes back, but think about what had to happen last time. The government had to intercede and bail out banks. That's a pretty big deal. What if they didn't? So don't plan for a miracle. Plan to be good. That's that's probably the better way to say it. All right. So I'm going to go to the charts. What I'm going to discuss today, because we're in damage control, I don't want to be reckless just because we're doing a show and make calls. So what I'm going to do is I'm going to discuss today first what's going on in the futures market, and then I'm going to go through three different ways that that I pick stocks. There's three different ways, three different methods, three different structures, whatever you want to call it. And I'm going to show you the one that I personally use. And this comes from my day trading background, where you constantly were looking to put your money in play, and you really needed to know the stocks you were trading, because it was very hard to trade with conviction if you did not know the stock. And I feel like I'm looking off camera here. So I'm going to get into that now, but I'm going to share the screen so we can take a look at what's going on pre-market. And the levels that are going on pre-market that you actually need to know. So first off, obviously, the futures started to rally, but the rally evaporated. And I want to show you on the charts what that means, because futures is a big deal. They obviously trade overnight, as much as close to 24 hours as possible. And this is actually what that means when we're talking about the future. So I'm looking at the E-mini futures. You can see it's the March 2020 contract, which expires in a couple of weeks. Here's the yesterday's low right here. So you could actually, here's yesterday's close, here's the low. So we punched through, made new lows, rallied, held those lows, rallied this morning, right, all the way into today, tried to break out again. So we got this resistance here. And actually, if I really want to give you a lesson from my day trading days, this is actually what we'd be looking at right now. So if we were in my office in New York City and we were trading, this is what I'd have mapped out. Now, I want to discuss first, before we get into this, I want to discuss a conversation I had with somebody yesterday afternoon in a coaching call in the Order Flow coaching program. If the market bounced yesterday, all things would have been normal. We would have had this monster load to the downside. Everybody was asking me when to enter yesterday, and I mapped out a couple of scenarios. Didn't follow through. Now, that's interesting because in this raging bull market, everything is just collapsed and rallied, and it was easy money buying every pullback. We're not seeing that right now. We're not seeing that from yesterday. At least yesterday's price action did not have a rip-roaring rally where it's just everything was normal again. So that due to that, I was trading lightly yesterday, being a little more careful with my position sizing, which was affected by the fact that the tape did not bounce. So that's the first thing. The first thing is I am actually looking for us to open lower again today and maybe find a bottom today. This is a pretty big deal. It didn't bounce yesterday. Number two is if you take a look what's on my screen right now, and you can see this is the area that I'm watching. I don't normally tell anybody to trade pre-market, but it is small because the liquidity is low, which makes it hard to get in and out of trades. Because of this trading range, those are the pre-market levels that I'd be watching heading into today, so I'd mark them off. So you could possibly do the same thing in your stocks. I don't recommend it unless it trades a lot pre-market or has some news, but especially in the futures, you do need to know these because a lot of people do hedge and trade them all day, every day, and there's computers trading them all. So these levels matter in the futures, especially when we have heavy volume. Because light volume doesn't mean anything. If somebody traded 100 shares, you can't be like, oh my gosh, there's support level there. If 100 shares traded, that's not support. But in this case, we do have some pretty serious trading going on with good reason. There's big stuff going on. So these levels, this box is what I would say if we were trading on my floor. This box is the price, and I would need to see price action in the SPY, even though this is the futures, they're pretty close. I need to see it get out of this box before I did anything. And again, if we were trading on my floor, if you're in the coaching program, you would say, I need to see the market tip its hand before I get involved. Now, if it trades lower, I can short sell. I'd consider short selling, but I would not be doing it with the same conviction if we trade higher and get out of the top of this box because there's a longer term bullish order flow, which actually brings me to my next thing. I am going to walk through the 3 different ways, and I'll put these links below the video. I'm going to walk through the 3 different ways to choose stocks. The one way that I trade based on my day trading experience, and I'm also going to put this link into the video, into the description below the video, so you can go and take a look at what I call the foundational lessons that I think are incredibly important to understand when you're actually opening an account and looking to take this seriously. So the one that we're going to take a look at right now is stock picking. So first thing I'm going to do is I'm going to put these back on the daily charts. I'm going to sort the symbol list just by alphabetical order, so there's no particular one at the top or the bottom. So I'm going to go over the 3 methods first. Again, I'll put this link below the box there, and I'm going to skip down. You can read this on your own time. So basically, this is what we're looking at right here. The first method is scanning technical setups amongst all stocks. So you basically look at every stock that's out there, and you'd be saying, okay, I'm looking for bull flags, bear flags, I'm looking for order flow, I'm looking for head shoulders, I'm looking for wedges, I'm looking for moving averages. Doesn't matter what the stock is. You feel comfortable in the way that you trade, that you're just looking for setups. It doesn't necessarily matter which stocks, as long as they meet the technical setup. The second one is to choose a non-related list of stocks that meet certain criteria with both volume and price action. Now, there's 3 parts here. There's non-related, which means in my world, this is actually, just to give you a heads up, this is the one that I trade. This is a basket of stocks. In the day trading world, it's called a universe of stocks. And stocks have personalities. The better you know the stocks, the easier it is to make money. When I first started trading way back in April of 2000, we were actually only allowed to trade 1 stock because they wanted us to learn that stock frontwards and backwards, anything about that stock. And it was a great way to really get conviction and get confidence in yourself because you knew that stock almost as well as the market makers at that time, which was, we were trading NASDAQ actually back then. So non-related. volume and price action criteria. In case you don't know, in case you're not in our inner circle, volume for me means I generally want at least 2 million shares per day if it's a day trading stock, and at least a million if it's a swing trading stock. I don't go below that because I just find that there's not enough institutional activity, or what I call smart price action. And then the last part is volume. Excuse me, price action. Price action essentially means that I want to see a minimum average true range in the stock. So that basically means that I want to see a minimum of $1.50 from low to high as the average true range criteria is $1.50 or higher. Now, I've seen people go lower, and what that essentially means is you're trading stocks that are safe, stocks that you feel that won't move too fast, so you can't lose too much money. I get that, but the downside is you're also not going to make any. You're going to be stuck in stocks that feel like they go nowhere all the time, and you're going to blame the markets. So you have to have that balance between volatility and managing your downside. So my criteria typically is 2 million shares per day on average, as well as $1.50 average true range. And then the last one is probably one of the more common ones that you see in hedge funds or trading firms that allocate large sums of money, is where you get hired by the firm and you're in charge of the tech sector, you're in charge of the healthcare sector, and that kind of stuff, where you're just watching a sector and you know that sector in and out. The upside to that, again, very similar to the strategy that I trade, where they're non-related. The upside of trading sectors is you learn that sector inside and out, and if something's going on, you should have a pretty good chance to make money because you own that sector, you've mastered that sector. The downside, which is actually the downside also to trading E-minis as a living, is when that sector is slow or there's nothing going on, you're basically shutting your business down, and it can be difficult to make money on a quarterly basis. Same thing with E-minis, especially if you're a day trader. Absolutely nothing wrong with trading E-minis. However, there are some days where the market just goes sideways, and that's very tough to find stuff to do. So you kind of feel like you shut your business down for the day. However, the upside of trading E-minis is when the market's obvious, the leverage is just amazing. So you want to kind of really balance between when you're trading stocks, when you're trading futures. And in my opinion, the best time to trade the futures are actually when they're obvious, because you could size up, make a lot of money in a very short period of time. So again, I'll put these two links in the description below the video. But I just want to walk you through very quickly the list that I'm trading that's in my stock watch every single day. And you can see it's pretty diverse. I have some tech stocks, I have some bank stocks, I have some obviously Tesla. I want stocks that have daily consistent order flow. And by order flow goes back to that criteria I said before. Well, on any given day, I can expect it to have good volatility. I can expect it to have good volume, so I can get in and out where I want. I can work positions where I want. And that's why I trade that. And again, that goes back to my day trading days. And I strongly recommend, if you're new to the market, don't trade any more than 3 to 5 to 7 stocks, and really learn those stocks inside and out. And another thing is, don't trade don't trade expensive stocks just because you can make the most money. If you're new to the market, and I guess this is a stock trading for beginners tip, if you want to say it, or mentoring advice, trade stocks that you can manage the volatility, but they also move enough for you to learn how to trade in stocks that actually move, and keep your share size down while you're learning. There's no reason to trade bigger share size until you actually, number one, learn how to find a good system that works for you. Obviously, mine is order flow and saturation points. And don't trade bigger until you prove it works and you prove you could follow it. All right, so I don't want to get too much into the coaching program here, but I do want to talk about order flow a little bit, because I've had a lot of questions about what order flow is since I started doing the videos, and I'm going to give a very brief breakdown here, because I want to be respectful of the people that paid and signed up for the program. But it really comes down to this: the easiest trades you will ever make is when you could look at a daily chart or a weekly chart if you want to go a little further, but I mostly live in the daily time frame. Can you look at that chart and say, is it obvious? Now, what ends up happening is a lot of people who are new to the market, or have another job, and they're just looking to do something because they want to be active, or they want to be a trader. And I'm not being mean to anybody. It's just a fact. I've been around the business long enough. Most people trade for action. Those few that actually do the work and listen to some of the stuff that I'm saying. I've been through this thousands of times with people in my office. If you do the work, you have a good chance. If you're just logging in every once in a while, leave your money in an ETF or in somebody else's hands. But these videos are here to help you take control, right? So order flow, without getting into the details of how to find it, if you could look at a chart and say, is it obvious? Is it obvious beyond a shadow of a doubt that buyers or sellers are in charge of that stock? If the answer comes back no, like in Deere here, for example, the last, let's say from November to now, it's been in a trading range. It really hasn't done anything obvious. It's been sideways. The buyers or sellers have not finally taken control of the stock and said, I'm going up, every pullback I'm going to support, as opposed to like it did over here. Or we'll get to the granddaddy of what's going on in the stock market right now, Tesla, where you can look at the stock and say it's clearly obvious. Now, what's interesting, despite the fact that Tesla's going higher now and continuing to have higher closes, it's not as clean as it was over here. So the price action in Tesla has changed. Whether it's reached what we call a cleanup print, whether it's distribution, where you get this, we talked about this in Apple yesterday's chart. It doesn't really matter because we're not going to call it top. That's not the point of the videos. However, what I want to stress and end this video on here is that do not risk a penny in a new trade unless you could look at that stock and say it's obvious. And how long has it been obvious? And then the last part of that is how much room is there to go? So is it obvious? How much room is there to go? And how long has it been obvious? And we talked about this a couple of days ago, and I'll end it on this. How long has it been obvious means how much money did smart money commit to that trade? So in other words, if let me stop sharing here for a second. So if you see three to 5 days of buying, it's obvious for 3 to 5 days. So think about it. How much money did institutions put into that stock moving 3 to 5 days versus how much money did smart money? I will just keep saying smart money for the sake of the conversation. How much money did smart money put into that stock if the stock's been going up since the last earnings report? 3 months of buying versus 3 days of buying. You want to shift into that thinking where, is it obvious? Is it not obvious? How long has it been obvious? And then the last part, how much room is there to go? Which means if I'm going to accept risk on a trade, is there profit potential that justifies me taking risk? But don't forget, the first part is it obvious? Because that gives us the juice to feel confident in the trade. And that's the edge in the trade where it's already going higher. There's already buying pressure. I'm going to find a spot to manage my risk because I believe there's room to go. So hopefully that helped. I'm glad that we actually picked a little bit different direction today. I don't want to call out stocks today because there's still too much going on in the market. We don't have a nice flow to the market right now. I do believe we're going to have some really solid buying opportunities, whether it's after the market bottoms out today or maybe pushes lower today and then gives us another opportunity. But be diligent, pay attention. I'll put those links below, and please subscribe. If you like the video, click down and subscribe and hit the little bell so that you get an email actually from YouTube when the next video comes out. So have a great day today, everybody. I'm Pete Renzulli. Thanks for attending today's episode of Stocks for Breakfast.